Give me a second, everybody. Give me a second, give me a second, give me a second. Yeah, good morning, good evening. Let's wait for YouTube to answer. Are we live? Give me a second, everybody. Yes, we are. And good morning, good evening. Finally, right? Good morning. It's Friday, everybody. Good morning, good evening, good afternoon. Students and traders, how are you? Yeah, good morning to you. Boss, did you party last? Yeah, we were partying last night already. So my voice is kind of whoa, right? Alright, everybody, this is our last lesson of the year. I mean, I'm not sure if you like it, but you know, I go on vacation, so it's Friday, December 20th. Alright, everybody, it's our last lesson of 2024 Dukascopy Academy, everybody. Okay, so we're going to do a quick recap, but before we start, don't let 2025. So this is my wish for you, right? Yeah, good morning, good evening. This is my wish for you, everybody. Don't, if you can, don't let 2025 to be just another year, right? This is my wish for you, okay? In 2025, try to do something, whatever you do, change a little bit, you know, change 1%. You don't need to change 360, change 1% in 2025. All right, do something different in 2025. Okay, and before we do a recap of this year, don't forget, everybody, if you need knowledge, we got you covered. You know, Forex course 101, Forex course 202, Fibonacci mastery, cryptos if you want, learn how to hedge. You know, if you need help with trading, you have a lot of knowledge, but you don't know how to enter, where to exit, you know, whatever, you can join the FX Boss trading desk. And lastly, if you do have knowledge and you know how to trade, you know, but you lack capital, you know, you are a super trader, you make 100% or you're $100, and now it's not enough money, right? So to change the lifestyle, we got you covered, alright? You can get funded and scale up to millions of dollars, literally with Darwinex and Morris Capital. In any way, everybody, if you need knowledge, if you need help with trading, if you need capital, send me an email to mikefxboss@gmail.com, right? Okay, if you want the little book of trading secrets, send me an email. And from the manual, everybody, this is our last session on 2024. From the manual, all right, from all the 218, what's the conclusion? All right, the conclusion now. Conclusion, right? So the Forex course 101, Forex and crypto course 101, you've been trained to learn the skill, if you did well, to learn the skill about probability and talking about direction. So you should have learned who is stronger from the same time frame perspective and who is stronger from the multiple time frame perspective when you analyze the chart. Then you should have learned timing and probability. The more convergences, the better. What are you going to do with opposite convergences? Those are bulls and bear points. And number 3, everybody, you've learned about patterns, and it's probability. Learn the rules, you know, who is stronger from the same time frame perspective and then the multiple time frame perspective. So this was Forex and crypto course 101. And then if you want, you're welcome to go to Forex course 202, which is in search of consistency. All right, and we have here, understand that a day trader and a scalper and a swing trader and a news trader or a position trader, all of those are going to have different strategies because of the personalities, you know, and they're going to trade differently, you know, the knowledge from Forex course 101. And number 2, understand the consistency comes from the edge, and in order to have an edge, we need to present, number 1, you know, numbers from collecting strategy samples. Hello, Alexander, how are you? This is our last lesson in this year on Dukascopy Academy. Okay, everybody? So type in the chat a currency pair, everybody. We're going to do a quick recap what you should have learned, alright? First comes first. Oh, the positions. Everybody, we can trade or we can do a recap what you should have learned in this year from the manual. It's up to you. Canada JPY still in red, Euro JPY still in red, GBP CAD max. You know, the markets are slowing down, everybody. You know, it's almost Christmas, you know. Max, GBP CAD, so nothing changed from USD CHF. It's in the red, Andre. Not a lot, but everybody, it's up to you. We can trade or we can do a recap, the technical recap of the Forex course 101, Forex and crypto course, which, you know, what you should have learned in 12 months, right? Talking about all the knowledge and everything. Okay, everybody? In the meantime, Alexander on YouTube, type in the chat what currency pair do you want? Or anybody else? Hedge fund trader Clara, hedge fund trader Julius, hedge fund trader Douglas, hedge fund trader Melissa, hedge fund trader Chris, hedge fund trader Mo, hedge fund trader MHB, hedge fund trader Marty, hedge fund trader Gary, hedge fund trader, I'm not sure anymore, Date, hedge fund trader Date. Type in the chat Dukascopy Academy trader students. Recap is better. Type in the chat on what currency pair. Everybody, we are going to implement this picture, alright? Forex and Crypto Course 101, you know, this is a picture of what you should have learned about the technical skill, you know, of becoming a good analyst. Once you become a good analyst, you can have your Lambo if you want, you know, or whatever. In the advanced course, in the advanced institutional trader course, you know, it's going to take some time, right? Alex, today we have class 3 p.m. Brazilian time, and today in the advanced institutional trader course, the title is going to be in class, the title is going to be why 90% of people all around the world are not making it, and what I'm not going to make in it, and my strategy is not going to work, and I'm not going to collect 100 samples. NZD CAD, everybody, first comes first is served. Alright, so let's go to NZD CAD. Everybody, NZD CAD, NZD CAD, NZD CAD, NZD CAD, NZD CAD. Give me a second. Okay, so hopefully you have your charts set up and ready for trading, everybody. 2024 recap, Dukascopy Academy. Okay, so number one, what you should have learned. You should have learned that the currency pairs, not the crypto market, but the Forex market acts on the monthly chart, you know, between the two bands, and JForex doesn't want to move or to work. It's Friday and it's our last lesson, right? It's Friday and it's our last lesson, so we need to wait for JForex to answer, everybody. Come on, JForex. I'm not sure why it's taking so long. F11. Okay, but I'm going to close it and open again, right? Maybe this is going to solve the issue. In the meantime, everybody, talking about the Forex course, Forex and Crypto course 101, do you have any questions about anything, everybody? Do you have any questions about anything, Alexander, too? Do you have any questions about support, resistance, pivot point, candlestick formations, Fibonacci's, uptrend, downtrend, consolidations, relevant highs and lows, market structure, market wave? Do you have any questions about any of those, everybody? Bull, bear points, multiple time frame trading, risk management, whatever. So hopefully, all right. Okay, everybody? If you did well and if you did the homeworks, I'm going to just change the time. If you did all the homeworks and if you did well, your chart should look like mine. Make sense, everybody? With a few differences, you know, if you didn't like pivot points, whatever, Fibonacci's, okay? Now, recap. What you should have learned in this year is that the Forex market, it's nothing more than a contract between the two countries, and those countries, because of import, exports, and stability, they are, you know, they sign a contract. This is the you know, it's the short terms, you know, it's the short story, you know, not to get into details, you know, you can learn more from books. But long story short, you know, they sign a contract, they're going to maintain the value of the respective currencies, everybody, between the monthly bands. Okay? And you should have learned that once the market comes to the frame. Hello, Douglas boss, how are you? So if you have, we're doing a recap of Forex course 101. Okay, this is a recap of Forex course 101. Okay, this is our last lesson on Dukascopy Academy. So everybody, this means that if you have a Fibonacci on the 1 hour chart, 2 hour chart, 50-minute chart, whatever chart, you must reverse the Fibonacci. You must reverse your uptrend. You must reverse your up market wave, also called market structure. Whatever you do when the market comes to the upper band or the lower band, you must reverse it, alright? This was number one. Then what we've learned is that when you chart, everybody, when you chart the market wave or the short-term trend, those market waves, also called market structure, and the short-term trend, you know, those two patterns are going to move in waves. In this example, the market wave, also called the market structure, and the short-term trend too, you know, they are moving in waves. What does this mean? You are going to have, if you're talking about downtrend or down market structure, you know, you are going to see the market making, yes, this is about charting. You are going to see the market making lower lows, lower highs, lower lows, lower highs, lower low, lower highs. And then the short-term downtrend or the down market wave, down market structure, that is going to stop extending and is going to start retracing. So on the smaller time frame, if you are looking at the short-term trend on the 1 hour chart, then on the 15-minute chart, you should see lower lows, lower highs, lower lows, lower highs, and then the market is going to stop making lower lows, lower highs, and start making higher highs, higher lows, higher highs, higher lows. This is going to represent the retracement on the downtrend or the down market wave, and then in some point in time, the market is going to stop making higher highs, higher lows, and is going to continue the down market wave or the downtrend, and is going to make lower lows, lower highs, lower lows, lower highs, lower lows. And this is the based on how the market works on the crypto market too. All right, everybody? So yes, we are doing a recap, everybody. So if I'm on the 4-hour chart, you know, and if I'm charting in here, everybody, right? If I'm on the 4-hour chart, now the yellow is the market wave. Okay, everybody, the yellow is the market wave, and just from the yellow, talking about the market wave, you can see, right, that the market was making higher highs, higher lows, higher highs, higher lows. Can you see it? In an extension, the green one, let me color code better. And now the green one from the extension, and then it went into retracement, and then again higher highs, higher lows, and then it went into retracement, and then it made higher highs, higher lows again. Can you see the extensions on the yellow? And then it had also retracements, lower lows, lower highs. Can you see the retracement on the market wave? Lower lows, lower highs, everybody, lower low, lower high. Retracement, can you see it? Okay. But when we talked about, so this is the market wave, the yellow one is the pattern, you know, but when you were trading on the 4-hour chart example, it could be the 1-hour chart, it's just going to change the pattern. If you would trade, everybody, the uptrend, this one, or if you would trade the downtrend, this one, you know, now the 4-hour chart, you are going to see extension and retracement on the 30-minute chart. If you would go on the 1-hour chart market wave, then you need to check the 15-minute chart. Give it a second, everybody. So now I'm on the 30-minute chart, and I'm trading the green uptrend, everybody. Okay. You've learned all of this. Can you see in an extension the market was making higher highs, higher lows on the short-term trend? Can you see it, everybody? And then the market stopped going into an extension on the short-term trend. Don't mix apples with bananas. You know, swing traders, we are on the market wave. Day traders, intraday traders, you are on the 4-hour chart, 1-hour chart, trading the short-term trend. And then the market went from up extension into down retracement. Can you see, everybody? Extension, retracement. And then the downtrend stopped and go into another extension. And then the extension stopped and the down, you know, the market went into another retracement. This time the green is the short-term trend on the 4-hour chart. And in the same way you would trade the 4-hour short-term downtrend, this one, the same way you would trade, if I delete it, the same way you would trade the downtrend. The market would make lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. And then the market would stop making lower lows, lower highs, make higher highs, higher lows, retracement on the downtrend again. Can you see it, everybody? You know, short-term downtrend on the 4-hour chart this time. So it was extension, retracement, extension on the 4-hour chart. And the same applies to, yeah, that's a recap. Boss, there is too much information. Of course it's too much information. We are compressing the 1 year, but go back to Dukascopy Academy and download the session and rewatch. Everybody, make sense? What else did we learn? We've learned, if I go back on the 4-hour chart, we've learned then that on the market wave, the extension, retracement, extension, when the market stops retracing and start extending, and vice versa, that those are called, what are those? Those are the so-called relevant highs and lows on the market wave. And to have a better probability, or to buy the up market wave, or to buy the up market wave, or to have a better probability to stop buying the market wave and start shorting the market wave, we said that, well, the market must break the relevant low. You know, if you've been shorting the market in here, this is low probability. If you've been shorting the market in here, this is low probability. Now that the market broke the relevant low on the market wave, now we have a change in the pattern. The market crowned, and this up market wave, you know, it started to be a down market wave. This is everything that we've learned so far. And the same goes for the shortened trend. If I go on the 30-minute chart again, you know, give me a second, and trading here, you know, so the green is the short-term uptrend on the 4-hour chart. The green is the short-term uptrend on the 4-hour chart, everybody, you know. And then I would see that, alright, this is the relevant low on the short-term uptrend. This is the relevant high. That's the relevant higher low. That's the relevant higher high. That's the relevant higher low. You know, and those are the relevant highs and lows. If I go back on the 4-hour chart, those are the relevant highs and lows of the uptrend. Okay, we've learned all of this. So not every, if this is the short-term uptrend, everybody, not every high and low is relevant, right? You know, and we've learned that if you short the market in here, and if you short the market in here, you know, those are risky trades, especially at past support. And this is where beginner traders, retail traders, you know, you get into a winner-loser cycle. You know, you are going to win one, but then you are going to give it back to the market. Why? Because you are going against the trend. All right. Then we have learned with this learning, with this knowledge, that your understanding, you know, grew. You know, that oh, this is not a downtrend, this is a retracement of the uptrend. We've learned all of this. You know, that you are really shorting a retracement, and that you should be careful, because especially when we come to support resistance pivot points. And then talking about high probability, so it would be better if I trade in the direction of the trend. It would be better that I trade in the direction of the market wave, you know. And then we extended our knowledge about the stop loss, the better stop loss, the safest stop loss, comparing the shortened trend, which is the green, and the yellow, the market wave. The better stop loss, the safer it's on the market wave. But if you're a day trader, you cannot use the market wave, so you must go to the shortened trends and trade from the shortened trends. All right, and you're going to monitor extension, retracement, extension from the lower time frame. And then we have learned that the best entry was end of retracement on the market wave, end of retracement on the shortened trend. And then we have learned that when the market is retracing, you know, then we move to the next module, everybody. So far, I'm not sure how we're doing on time. Okay, so far this first lesson number 1 to lesson 18, you know, it was market structure and trends. Starting from lesson 18, you know, it's the module called timing and retracement trading. Okay, and I forgot, I'm sorry everybody, We also learned about, were we here? No, we're not here. Give me a second. We also learned about, we also learned about trend lines. The trend line is a tool that confirms the trend. We've learned about counter trend lines, right? And then we learned about that, when the market is retracing or on the market wave, or when the market is retracing on the short-term trend, and this is the relevant high, that if this is also a level of past support, that this is going to where the market is going to bounce, most likely. And then we've learned that sometimes the market, does something like this, and start to retrace. Give me a second, and this is the relevant high, but you have, this is a level of past support, and this is a level of past support, We've learned that sometimes the market, if the market doesn't bounce on the first level of past support, that 9 times out of 10 is going to find another lower, deeper level of support, and then it's going to bounce. And then we've learned with the counter trend line break, to have a better probability, you need to see the market to break the relevant high on the retracement. So here you have a counter trend line break. Boss, you're going too fast. Well, we are doing a recap in 1 hour of the whole year. What do you want, everybody? If you didn't learn in 12 months, believe me, in this last lesson you're not going to learn anything. This is just a quick recap of what we've learned so far, and most likely I'm forgetting a lot of stuff too. But nonetheless, everybody, so here you have a counter trend line break, and we've learned that this higher high, higher low, it's not an uptrend, it's a retracement on the downtrend. Alright? We are in the module retracement trading. We're in the module timing and retracement trading. And if this is the uptrend, and the uptrend makes lower low, lower high, lower low, lower high, lower low, and then on the 30-minute chart or on the 1-hour chart, this is the relevant high, and you are buying this one, we've learned that, whoops, this is not an uptrend anymore. And if you would buy on the 30-minute chart, 1-hour chart, 15-minute chart, you would lose. Make sense? This is the lesson about timing and retracement trading. For you to have a better probability, you must wait for the market to break the relevant high, which is this one. So here if you've learned well here you can become a skilled day trader. You're not a trader yet, you're an analyst, but this skill allows the future day traders, professional day traders, to enter short-term trading on the 15-minute chart, 30-minute chart. Okay, so we've learned that counter trend line is not enough, and then we talked about convergences. What are convergences? Convergences are bulls and bear points. So let's buy in here. Okay, why would you buy? Well, counter trend line break, 1 point for the bulls. Okay, so it's a retracement, point for the bears. Still in a downtrend, point for the bears. Past support, fair enough, point for the bulls. And if we stop here, this trade doesn't have a big probability because you have 2 points for the bulls, 2 points for the bears. So you have a 50-50 chance of your trade making money. And then it's up to you if you want to trade there, if you want to trade, some of you trade, if you want to enter with low probability, risk less. Otherwise, wait for the market to crown, wait for the market to break this relevant high. So the short-term trend on the 30-minute chart, you're going to have the first extension leg, then it's going to retrace, and then it's going to move up in here. And then we learned about support, resistance, pivot points. Many times, the market reacts at pivot points. So if we check NZDCAT daily chart, just an example, give me a second, everybody. So here, just an example, that the market reacts to this pivot point, and then the market reacts to this pivot point. And this is also of extreme value. Short-term traders, day traders especially, change at the pivot point, reaction at the pivot point, reaction at the pivot point. And we've learned that you should freaking propaganda, that you should chart support, resistance, pivot points, everybody, from the monthly chart. Okay, so the support, resistance, pivot points that you are seeing on the daily chart and the 4-hour chart and the 1-hour chart, those are from the monthly chart. F11, double click. Okay, everybody. And then we've learned, if this would be the case, you have, so if this would be the uptrend, right? If this would be the uptrend and you have 2 support levels that you can predict that or the market is going to go back up in here, just an example, or the market is going to go back up from in here, just an example. Why that? This is now past support from the daily chart example, and or the market is going to go up from this level. Okay, and here you are going to check convergences, right? And then we've learned that not every entry is the same, and we moved forward to candlestick formations, So if here you would have a bullish candlestick formation, it would be a great entry with the counter trendline break. And you've learned that, you had a counter trendline break but no bullish candlestick formation, counter trendline break but no bullish candlestick formation, and then lastly you would have a counter trendline break with bullish candlestick formation at the pivot point or support. That this would give you more bull points than bear points, and this would be a trade with a higher degree of success, with a better probability, compared to those 3, everybody. And lastly, we've learned about the Fibonacci's. We've learned about the Fibonacci's, that the Fibonacci goes on price action, everybody, and that you can use the Fibonacci to determine trend direction. And you can also trade the Fibonacci as a tradable pattern, and the Fibonacci as a tradable pattern has a statistical edge. It wins 7 times out of 10. The original Fibonacci wins 7 times out of 10 on the daily chart. Statistically proven, no doubt about it. Boss, I don't believe you, I don't trust you. This is excellent, prove me wrong. Those are the best experiences, everybody, And then joining forces with everything that has been said so far, past support, past resistance in this case, pivot point, bearish candlestick formation, NZDCAT breaking the counter trend line, multiple time frame trading. The higher time frame controls the smaller time frame, and then now you have the first down leg. And now that you are going to short the market, now the market is going to go against you, and you are going to lose. And when you are going to get out, I'm going to get in, because the market must wave from the monthly chart and the weekly chart and the daily chart. So then you've learned how this market works, joining forces. And the biggest secret of the Forex course 101 is that what makes the money is, before we finish our last lesson 2025, Forex and Crypto course 101, what makes the money is, type in the chat everybody. You have 6 variables, but one variable is the most important. If you don't have this variable in place, meaning if you're doing this wrong, the other variables are not going to help you. What makes the money is variables: entry, trade exit, trade management, risk management, stop loss, take profit. What makes money to the trade is the stop loss. Applause, Alexander. The stop loss, the appropriate use of stop loss, all of this knowledge that you've been learning so far, if you don't put the stop loss in the appropriate place, and the only appropriate place is the pattern that you are trading, but 80% of you are not listening anyway, and that's alright, it's alright, this is how the human being, right? The stop loss goes on the pattern traded, the stop loss goes on the pattern traded, and this is how you grow, from analyst, then you go to the advanced institutional trader course and figuring out how this works, makes sense? But the stop loss goes on the pattern traded, and as a retail trader, Dukascopic client, you get frustrated and anxious, and then you mess with the strategy, mess with the entry, and nonetheless you mess with the stop loss. And then the market stops you out, and then the market and then the market goes your way, right? Okay, everybody, see you back in January, everybody, at least me. I'm going to be back on Dukascopy Academy January 13. Have a great Christmas, everybody. Happy New Year. And remember, my wish for you is don't let 2025 to be just another year, because it's just me, it's just... Okay, everybody? Thank you very much. The boss is going on vacation. Finally, see you back January 13. Have a great Christmas, great festivities. Celebrate, wherever you are, whatever you do, celebrate. It's celebration time. You deserve it. Okay?